General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Okay. It's back testing. Chartwork. Q2. Week 2. Logs. Tuesday, April 8th, 2025. News tomorrow. Forex Factory. FOMC minutes. Sometimes I'll be looking at the yellow folder. Sometimes the yellow folder does something. 2 p.m. FOMC minutes at 2 p.m. CME Fed Watch. They want rate cuts. %. Okay. I think the China news is kind of pushing that. 52% in May. May, so half and half. I'm betting it's dependent. Tariff with China. Let's go here. Let's get June. June should be like 100%. Wow. 100% cut. 50% is thinking about 50 basis points. That could shock the market. %, chance of a rate cut in June. Crazy. On the 18th. So I can remember the day. Let's go here. Delta. Delta's kind of important. Move this. Nothing that will move the NASDAQ. Let's go to dollar. Dollar on the daily. Okay, we got CSD. No, we don't. We really got to watch this. This is a long week. Everything can't be great either. I kind of have to ignore the week and look at the opening price. But still, I don't trust this. It's a gap here. Yeah. Still feel like the dollar can go up some more. The gap from Tuesday to Wednesday. Or, yeah, that is. Looks interesting. And when we do sell, I want to see big displacement. Let's look at today. Let's take off this alert. So this missed target, even though it looked like it hit. Target missed. Let's go to the weekly. Doji on the week. Doji on the weekly candle. Makes it hard to want to push and pick a direction. Even with CPI coming down even with CPI coming, it still feels like this week will be a doji that will allow the bearish expansion to breathe before we can think about pushing up to rebalance or reverse. Let's go here. Closing below this candle, I mean, you could say, oh, hit the open. Well, that's the open, that's the close price. Monday and Tuesday is sideways. Today was inside day. We can get expansion tomorrow. And push up to Monday's high. And then sell back off. Leaving this whole weekly candle a doji. Let's go to H4. Came back to the H4 fair value gap here. Kind of respected it, but RS came back to the H4 fair value gap. Kind of respected it with the wick. I would rather see a tap and go, but looking at the higher time frame makes me think we just engineer liquidity with Monday and Tuesday, with Monday's range, because we still in Monday's range. Let's go to H1. Still didn't hit that. I still would like to see a turnaround of this. This is the H4. We already did that. I want to see a close above this candle, retracement, higher prices. Monday's high is my target. Monday high is my target. At 18,360.25. Validation point. Would be if we close through the H4 fair value gap. Alert said beat this down candle. H1 CSD on NASDAQ. Alert set on down candle. That would be a possible reversal if we close above. Okay. Boom. All right. That's that on that. Y'all have a good day. Peace.